Hey there, good morning all. And as we set the stage today for the market action, uncertainty is front and center. It's driven by rapidly evolving legislative landscape in Washington and the looming July 9 tariff deadline, both of which could prove decisive for investor sentiment. The focus is squarely on President Trump's sweeping Big Beautiful Bill, which has just squeaked through the Senate after a marathon voting session and now faces a contentious path in the House. This legislation is a sprawling package combining $4.5 trillion in tax cuts, with a particular boost for semiconductor manufacturers who would see their investment tax credit jump from 25% to 35% if they break ground on new US plants before 2026. So this is an incentive to convert promises for investment into actual investments on the ground, a good move in my opinion. This is alongside deep cuts to Medicaid and other social programs. The Congressional Budget Office warns that these healthcare cuts could leave nearly 12 million Americans uninsured by 2034, with rural hospitals especially at risk. For markets, the bill's final shape remains a moving target in my opinion. While the Senate version phases out many Biden-era clean energy incentives and imposes new restrictions on solar and wind tax credits, last-minute amendments soften some of the most severe provisions, such as scrapping a proposed excise tax on renewable energy. However, the uncertainty over what the House will ultimately pass and whether the fiscal hawks will remain will demand even deeper spending cuts remains to be seen. This means investors are left guessing about the final impact of a sector that they are interested in, whether it is tech or healthcare or clean energy. So the way I look at it is the bill is like, I don't know how many of you have seen the movie with Vin Diesel. It's called Riddick Chronicles. So in one of those Riddick Chronicles, there is this really hot planet in which they land. And in that planet, as long as there is shade, everything is fine. But the moment the sun comes out, people get incinerated. So we have the scene of a particular alien walking on the planet and the sun comes on, he starts disintegrating. So that's kind of what I visualize is happening to this particular bill. A lot of things are getting stripped off, but at the end of the day, we don't know how it's going to come out because in House they may make some changes before passing it. And that's one of the uncertainty that I think the market is looking at today. And adding to the volatility, Amazon founder Jeff Bezos sold $737 million in Amazon shares yesterday, part of a pre-arranged plan to divest up to 25 million shares by 2026. And while it is routine for Bezos, such large insider sales can sometimes add to broader market jitters, especially when combined with all the uncertainties that we spoke about. And finally, all of this is playing out against the backdrop of the July 9 tariff deadline, which threatens to upend global supply chains. If new levies go into effect as scheduled, the combination of legislative flux and trade policy risk is likely to keep the market on edge in the days ahead. And when I talk about S&P 500, I'll show you a very important inflection point where this could all culminate. In summary, I would say that the markets are navigating a fog of uncertainty, not just over what policy will ultimately emerge from Washington, but also how quickly and sharply it may reshape the landscape for key industries and consumers. Stay tuned for a potentially volatile session as investors digest headline and also the amendments in the bill. And by the way, we have problems in the employment front as well. The number of announced layoffs in 2025 is much higher than last year, signaling increased economic stress. The only recent years with more job cuts in the first half of 2020, which was the COVID-19 pandemic, and 2009, the Great Recession. So that's what we are comparing with the current numbers. And the surge in layoffs is attributed to factors like tariffs, funding cuts, declining consumer spending, and overall economic pessimism affecting a wide range of industries. Focus now turns to the monthly non-farm payroll report scheduled for release on Thursday, which is tomorrow, a day earlier than usual because markets are closed on Friday for Independence Day. The reading is expected to show U.S. job growth cooled in June and unemployment rate ticked up to 4.3%, according to whatever data that Reuters publish based on polling economists. And we also have ADP's private payrolls data for June due at 8:15 a.m. And with that said, I think let's now go and have a look at the TradingView platform, look at the price charts and see what is happening out here. Now, out here we have S&P 500 and first of all, I'll just make this as a single window, and then I'm going to go into the 1-day time frame so that we can get a better look at each of those charts. Now, the inflection point I was talking about happens to be on the 3rd of July, which is tomorrow, where we have the intersection of this diagonal line of resistance with this line of resistance out here at 6,283. Now that could be a point where the index can turn downwards because we still have the bearish divergence. We have RSI tending towards the signal line and overbought conditions. So something has to give, and potentially around that time we may have some information that could push us down. That's the way I would look at this 3rd July inflection point. Then we have NASDAQ next. And if you look at NASDAQ, you can see that we have this diagonal line of resistance, which has been with us for quite a while. And we have dropped down from there. This would form a bull flag. So right now, it's very difficult to make a decision what is going to happen. We do have the bearish divergence still in place, and we have the 9-day exponential, which is giving us support. And the 9-day exponential happens to be at 22,535. So that's the support that we got here for today. And the resistance for today is going to be somewhere around 22,953.25. And then we look at the dollar index, which is recovered a little bit, but it is still way below the resistance of 97.279, probably one of the weakest positions we have been with the dollar index for in the recent past. And then if you look at the 10-year yields, they are starting to inch back up, being held by the 9-day exponential. Likewise for 20-year yields and the 30-year yields. If you recollect, just a month ago, these were just on top of 5%. So compared to that, we are still in a better place. But 4.82%, these are all high interest rates. And as one of our subscribers said that financing shorts is becoming more expensive. So there's likely to be a lot of shorts being squeezed out. So all of those things have been acting on the market. We'll see whether 3rd of July can bring them all to a head and if things start turning around. That said, if you look at the indicators where we left them on Friday, we were just on top of our resistance line of resistance, which is at 6,200.75. And we ended at 6,198.02. So this diagonal line of resistance still persists, and for today it's going to be at 6,203.04. If we open above that, this will become the line of support, and our next line of support is going to be 6,152.74. So that's the range in which I think S&P 500 should move. Of course, we do have this bearish divergence going on out here. But markets can be crazy for much longer than we can be sane. Now, if you look at NASDAQ, again, same issues. We have got bearish divergence going on, and this diagonal line of resistance continues to, let me just turn this red for us, continues to provide a resistance today. And for today, the resistance is 22,698.30. And the support is going to be very strong. And the support is going to be somewhere around 22,309. That's the range at which I think we are going to get a support. And if you look at VIX, it is steadily going up. It's up another 0.95% today. And gold is up 0.08%. It's gone above the 9-day exponential ratio, exponentials, and also the 21-day exponentials. So it's getting some support out here, and it can start moving upwards. So the resistance, if you want to look at it, could be somewhere around 3,423. That's the resistance for gold. It may not reach there all in one day, but around 3rd of July, that is maybe by tomorrow, I think we should be able to see some significant movement on all of these as the bill starts coming to some kind of a fruition. Now, if you look at QQQ to see what's happening in the pre-market action, we can see that the pre-market action is down 0.21%. And our support for today is going to be the 9-day exponential, which happens to be at around 542.77. That's our support for today. And our resistance for today is going to be 552.24. So 552.24 is the resistance, and 542.77 is the support for QQQ today. Now, next, let's go on and have a look at our AI stocks. And then in that, I would look at NVDA, which is down 0.70%. There is this interesting news item out here, which kind of escapes. So I'm just going to read it out from the bubble at the bottom. It says NVIDIA's expected earnings growth is projected to significantly exceed that of the overall S&P 500 and its information technology sector, raising concerns about its influence on the broader market. So is there going to be any index adjustments? If they adjust the index to have lesser percentage representation for NVIDIA, then many of these ETFs and index funds which hold NVIDIA will have to readjust and sell off some of the NVIDIA. That could put a little bit of downward pressure momentarily. But at the end of the day, price to earnings and pegs are the ones that determine the value and the price of the stock. So things should bounce back again for NVIDIA. And if it is true that AI is the next industrial revolution, robotics is the next industrial revolution, and the synergy of AI and robotics is going to boost productivity, improve quality of life, and bring people out of poverty and do all miraculous things, then I think NVIDIA is a gold mine. So we'll have to watch what happens in this area, but that's the context that we have to keep in mind, in my opinion. Let's look at Meta, which is down 0.26%. And we have the support from the 9-day exponential at 716.92. Right now, we are down 0.26%. We are at 717.31. Then we look at the fact that Meta is going to increase its employment costs. It's trying to poach all the biggest talents in AI from across the board. So that's going to increase the cost for Meta, and they have to deliver some returns along with that. So that becomes the challenge for Meta going forward. Now, if you look at Google, Google is down 0.43%. It has agreed to acquire cybersecurity software developer Wiz for $32 billion, marking one of the largest transactions in the first half of 2025. Now, if you keep that news in context, and also the fact that they have got many models of AI that they have already deployed and monetized, and they continue to work in increasing their data center capacities. So put all of those things together, then that's a very positive catalyst going on for Google. And if you look at the valuation of Tesla with robotaxi and robotics as being the drivers, and then look at Waymo and other things that Google has got, I think Google definitely is very well priced, and it's in a very good position to take advantage of the future. Again, these are all my personal opinions, and I would look forward to your feedback as well, because as a retail investor, I'm also looking at what the market participants are thinking and what other retail investors are thinking. So if you have some trade ideas or something, put them in the comment section. I'll definitely respond to them, and they'll be very useful. Now, let's look at Amazon. Amazon has got a little bit of negativeness because of the Jeff Bezos wedding happening in Venice, and the kind of spending that's happening while people are losing their jobs and Medicare is being cut. And there is a lot of publicity about the fact that employees of these companies are using Medicare. They are not even getting sufficient salary to take care of themselves. So all of this optics doesn't play out very well. Pre-market, Amazon is down 0.43%. But then at the end of the day, all the earnings that they do is going to help them. There is news that they have deployed even more robotics. That means cut to employee expenditure, which means addition to the bottom line. So that should actually boost their profitability. And as a result of that, the PEs and PEGs will dictate that Amazon price should be stronger. This is again a very strong stock for the future, in my opinion. But momentarily, it's finding a little bit of negativity. And also, you have this reverse head and shoulder pattern, which I had identified with the price target, which is very incredible. But again, this is what I think, 258.44. I'd like to have your feedback on that in the comment section. And then we have Apple, which is up 1.18% in pre-market trade. And there are two class action lawsuits against Apple alleging false claims about AI features in the iPhone 16, potentially misleading investors about device sales and financial outlook. Maybe that will start showing some effect out here. But for the time being, in pre-market session, I think we have established that 207.21 is going to be the support for today. And I think in terms of resistance for today, I would say that the resistance will start manifesting at around 212.63. Right now, pre-market, we are up 1.09% at 210.08. So that's what we have out here. And let's go on and have a look at the next stock in our watch list, which is basically going to be Microsoft. Microsoft is down 0.50%, and it has fallen below the 9-day exponential. So 9-day exponential sitting at around 490.87 is going to be a resistance for today. And the support for today is going to be the 21-day exponential at 479.50. So our support is 490. So our resistance is going to be 490.61, and our support is going to be 479.76 for Microsoft today. We had a bearish divergence, which is starting to manifest in the price action. So the correction is starting to take place. RSI was also overbought, so it's also cooling off. Tesla is up 0.58%. The numbers are going to come out. That is the excitement out here. But at the same time, where President Trump is going to seek DOGE on Tesla to cut out everything. So that would mean some loss of business with SpaceX, some loss of incentives for EVs and solar and other things. So that's one thing. And apart from that, there is also a statement that Trump made when a journalist asked whether he's going to deport Elon Musk. He said, we'll have to look into it. So I wouldn't put it past Trump to unleash all the hounds on Elon Musk, and it will be interesting to see what happens out there. Of course, I'm still holding on to my TSLQ, and we'll see what happens later on as the market opens and we get more data. Oracle is down 0.16% in pre-market trades. Of course, it's going to get support at 215.31. AMD is down 0.51% in pre-market trades. 9-day exponential, which is sitting at around 137, has now become a resistance for today, and the support is going to be at around 131.01. Again, in this case also, we had a divergence, and the divergence is starting to work out. SMCI is up 0.36% in pre-market trade. The 9-day exponential is going to be a support at 46.99. Right now, we are at 47.37. Our resistance is going to be 50.34. Broadcom is down 0.13% in pre-market trades, and our 9-day exponential sitting at around 264.54 is actually the support for today. We'll see what happens when the market opens. If it opens below this, then this becomes a resistance, and the support will become 255.64. Palantir is flat in pre-market trades. It has been down a few days, and our biggest support for today is going to be the 50-day exponential and also this horizontal line of support, all of them sitting in the region of 124.50. Now, if you look at SMH, semiconductor equity, it's ETFs, it's at 0.40% negative in pre-market trades, and our 9-day exponential at 272.91 is going to be the support for us. And if you look at Tempus AI, it's up 0.31%. And we had a resistance out here at 59.39. That is currently acting as a support in the pre-market session. But if we fall below this, I think this will become a resistance. So I'm going to leave it as it is. I would say that the bias for Tempus AI is more downwards than anything else. And we'll soon start seeing death crosses getting formed out here. So I would say that I would leave this line of resistance intact at 59.39. for Tempus AI. Now, with that said, I want to go and have a quick look at genomics. And in genomics, we got Prime, which is up 0.37% in pre-market trades. And I don't see any major news other than the fact that Prime Insider bought 21,000 shares. That could be a little bit of positive momentum for this share. And the 9-day exponential at 2.37 continues to be a support. Intelia is up 0.51% in pre-market tradings. And we have resistance, which is going to be at around 11.30. And support is the 9-day, support is going to be at around 8.97, which is this horizontal line of support. Next, we look at Caribou Biosciences, which has got no trades in pre-market sessions, but it was looking at support from the 21-day exponential at 1.23, and it does so again today. Beam Therapeutics is up 0.46% in pre-market trades, and we have the 50-day exponential at 17.96 as the resistance. We also have a support at 17.44. Right now, pre-market, we are at 17.61. Altimmune is up 2.36% in pre-market trades, and we have resistance at 5.35. Let me convert these into red, and let us look at the next one, which is Verve. Verve is up 0.09% in pre-market trade. It seems to be consolidating out here and creating some kind of a base for future movements, and that is more plausible because there's a fixed price at which Eli Lilly is willing to buy the stocks, and then there are some incentives for people who wait for a longer period of time. So all said and done, I think this gap fill ain't happening anytime soon. We are building a foundation out here to move further up. Now we have got Editas, which is up 0.89% in pre-market trades. They have, I think, a good deal of support from the 21-day exponential moving average at $2.07. And also they have support from the 9-day exponential at 2.20. Pre-market we are at 2.27. We have seen a steady growth for Editas. And if I was to draw this diagonal line of support out here, you will see that we have a bull channel on which we are riding. It's very gentle, but this is good for genomic investments. A rapid rise means a rapid fall, volatility goes up. We are seeing a little less volatility in genomic stocks, and I welcome that. If you look at Illumina, it's up 0.80%, again, a gentle slope upwards. Very good movement. And we have support from the 9-day exponential at 93.96, and the resistance is going to be 103.29. CRISPR Therapeutics is up 0.29% in pre-market trades, and the 9-day exponential, which is sitting at 46.47, is the resistance for us here. Now, I would like to draw a line of resistance out here, connecting all these top points as much as I can. And you will see that yesterday we had a doji candle and we just hit this at 50.06 and came down. This is a dynamic line of resistance, and for today, it's going to be at 49.93. Then if you look at Allogene, Allogene has got no trades in pre-market session. And if you look at Grail, no trades in pre-market session. PSCB has no trades in pre-market session. RG is up 0.29% in pre-market sessions. And we have the 9-day exponential sitting at 24.16 being the support. And we have resistance, and that resistance is going to be out here. And it's 24.73. Right now we are at 24.24. If you look at Vertex, it's down 0.27%, and we continue to have support at 449.23. Pre-market, we are at 450.93. Ginkgo Bioworks is down 0.18%. Support continues to be the 9-day exponential at 9.94. And that kind of brings me to an end of today's chart with chart reviews. I'm going to go back into indicators, look at gold and see how it is doing. It's up 0.08%. Now it's time to look at what we have in terms of news, if something new has come up. And I do not see much new out there other than the topics that we have already discussed. Mortgage refinance demand surges as interest rates dropped further. How much has it dropped? It has dropped to 6.79% from 6.88%. Still, 6% is a very high rate of interest to be locked in for 30 years. I think I think that's not looking that great from my perspective as a Canadian, but maybe as an American, it looks much better. I won't understand American markets as much, housing markets, but out here we are looking at 4% plus, and that seems unpalatable. The housing market is in a rut out here in Canada, so I don't understand this sentiment out here. With mortgage finance, a few points drop doesn't matter much when you're locked in for 30 years. What else do we have here? Senator Murkowski casts a crucial vote. Forget politics. What else do we have? Tesla shares drop on Musk. Trump feared ahead of Q2 deliveries. Yeah, that's what we spoke about. Now let's go and have a look at ADP, whether ADP has dropped. It's only 810. It comes in at around 815 ADP job numbers. Oh, we have it here. 1 second. Job openings unexpectedly increased in May. What the hell? Wow. The wait and see is turning into just can't wait anymore. US employers move forward on plans to increase their workforces in May, with number of available jobs rising to a 6-month high. According to Bureau of Labor Statistics data released on Tuesday, job openings, which serve as a closely watched measure of labor market demand, totaled an estimated 7.77 million at the end of May, raising 7.4 million in April. Okay. Economists were expecting the number of available jobs to retreat after unexpectedly bouncing higher in April, reflecting an environment where uncertainty has frozen some businesses in their track. Consensus estimates were for job openings total of 7.3 million last month, and it came in at 7.77 million, worse than expected. Okay, that is a negative sentiment, of course. Let's look at what is happening with the futures and see where we are. So the positive futures of S&P 500 and NASDAQ has now turned negative. So that brings me to an end of today's session, my friends. I have got to go have my breakfast and then come back to do some trading. Thanks, and have